Hello and welcome back. So we'll continue with the question. So I'll do the last question for this paper. That's question 25. So without much ado, let me read the question. Kondiek Limited deals with both vertible and non-vertible supplies. The following transactions were obtained from the accounting records of the company for the month of July 2025. So we have all that. Then additional information. Then required. Calculate the following for Kondiek Limited for the month of July 2025. Roman 1, deductible input tax. Roman 2, output tax. And Roman 3, VAT payable or refundable to Kondiek Limited for the month of July 2025. So this is a question on VAT. And we will prepare the VAT account. So straight away, prepare the VAT account. Sorry. Yeah, so we always have the input VAT and the output VAT. So input VAT. Let me have the output VAT this other side. Output VAT. Okay, so I'll highlight that, then maybe bold, then also of that I'll put the bottom border. So here the input. Yeah, so this question you have to understand what is input. Input regards to all purchases or services acquired by the company, the Kondiek Limited, while the output are the sales or supplies made by Kondiek Limited. Yeah, so we're going to analyze this through the VAT account. Yeah, so we start with the sales at standard price. So sales is an output VAT. So the details will be sales at standard price. Sorry. Yeah, then the VAT, we'll calculate the VAT straight away. Standard sales are charged VAT. Yeah, so we are told, so it's not standard, that this was a typing error. Standard. Yeah, standard price. Yeah, so we'll calculate the VAT. So we have input and output VAT. So what will be our VAT here? So we're told that all these all transactions are inclusive of VAT at the rate of 16% where applicable. Yeah. So if they're inclusive of VAT, then it means that for us to get the output VAT for sales at standard price, we'll say equals to, it will be 16% over 16 over 116. Then we multiply by the amount. Yeah, the amount which is 98. Sorry, this is what I want to do. Sorry. Yeah, so sales at standard price. Let me have the amount for the sales here first. Then now we'll calculate the VAT here. Okay. Yeah. So our VAT will be this value times 16 over 116. Yeah, because the VAT, it was inclusive. Yeah. Then we continue. The next item is purchases at standard price. So purchases are input VAT. Okay, you are doing the purchase. So we'll have the details there. Purchases at standard price, and allow me to increase the size of that column. Then the amount. Yeah, you will put the amount there. Then the amount now for the VAT will fall here for the input VAT. So we'll take that. You multiply. Yeah, those are standard purchases. So they are subject to VAT. So we'll multiply that by 16 over 116. This is the rate for VAT, and you get that amount. Then we go to exports to Zambia. So exports are sales. Yeah, so we'll have them here. The output VAT. So export to Zambia, those are exports. So exports at zero rated. Yeah, so before we do that, we'll determine the amount for the exports, 40,000. Yeah, but all exports are zero rated. Yeah, so you take 40,000, you multiply by zero. And that will still give you zero. Mhm. Then we continue. We have exempt sales. That's an output VAT. So we'll have it there. Copy the details, exempt sales. And the amount, you have to indicate the amount. Yeah, they're exempted, as the word states, they are exempted from VAT. So there's no VAT charged on that. So you leave that blank. Okay. Then we have stationery. Yeah, so stationery, these are stationery which are purchased by Contiac Limited. Yeah, so that's an input VAT. Yeah, so stationaries are subject to value added tax VAT. So what was the amount? The amount for stationery was 2320. And then the VAT will be 2320 times 16 over 116. And you enter. Continue. Audit fees. Yeah, audit fees are fee you pay for consultancy. Consultancy. So they are also subject to VAT. So take audit fees. The amount was 174,000. And our VAT will be 174 times 16 over 116. To enter that amount. Then we have catering services. Yeah, so catering services also qualifies for VAT. And the amount is 6960. So therefore, we'll have 6960 times 16 over 116. Yeah, because we are told they are all inclusive. Yeah, so I'm done with the that information there. Sorry for that. So the other thing that I'm now having, I'll go to additional information. And under the additional information, we are told that the company, number one, the company issued credit notes worth shillings 53,360 for goods wrongly priced. Yeah, so that's an input. Yeah, so that's credit notes issued. So the credit note issued, that will be an input VAT. Credit notes issued by the company. So they issue 53. The amount is 53,360. So we'll also charge it VAT. So we say equals to this amount times. Yeah, the credit note is based on sales. So it reduces the sales. So it has to be on the side of the input. Yeah, so when the company issued credit notes worth that amount for goods wrongly priced, so it means that it will reduce the amount of sales at standard price. So that's why we have it under the input VAT. So we take that value to multiply by 16 over 116. Then number two, the company received debit notes worth 41,760 for goods underpriced by suppliers. Yeah, so we have the debit notes received. Yeah, so we'll have it under input also. So the company received debit note. So debit note received. Not received, yeah. Yeah, so you can see debit note received is also an input VAT. So we look for the amount. It was 41,760. 760. And the VAT will be equals to 41 times 16 over 116. Yeah, so we have that. So you can see we have credit notes issued under the input VAT and debit note received also under the input VAT. So the opposite is true. Now when it comes to output VAT, what will you have? You'll have credit note received, this other side, and debit note issued. Okay, yeah, that it's actually the opposite of that. So number 3, a debtor of goods valued at shillings 20,880 was declared bankrupt, and the amount owed written off as bad debt. So we'll calculate the VAT on bad debts. Yeah, so bad debt. So that's an input VAT. The bad debts, the amount was 20,880. So sorry, 20,880. Yeah. Okay, then the VAT will be equals to 2880 times 16 all over 116. We continue. Number 4, a customer of goods valued at shillings 928 returns the goods. So those are return what? Return inwards to the business and a credit note issued. Yeah, so there was another credit note issued. So I'll just copy that there. Yeah, they return the goods. These are goods which were sold. So the entry has to be under input because output VAT is where we have the sales. Okay. Yeah, so the amount was 9280. 280, and it's calculating automatically. Yeah, so yeah, we have I11. It will calculate automatically. Them 16 over and 16. Yeah, so that's okay. That's okay. Then we are told that 20% of purchases at standard rate will not be directly identified from sales at standard rate and exempt supply. So that's what we call the restricted deductible input tax. Yeah, so we'll have to calculate, though they have already told us to calculate deductible input tax. Then number 6 is what we have been working with, the values we are given that transaction at the rate of 16%. Yeah, so once you have analyzed that question, we have the input and the output VAT. Yeah, so once you have this data, now we'll be able to determine what we call the deductible input tax. Yeah, so this is what I'm going to do. Yeah, so we'll say deductible input tax. So what is the formula for the deductible input tax? So the formula for the DIT is always the VAT equals to formula is VAT supplies. You divide by, now let me say it, VAT supplies. Let me increase this. Let me create a bottom border there. So you divide by what? By total, total supplies. Times, now what that fraction you multiply by, say, times the total input tax. Total input tax. Okay, so we are going to look at the what is VAT supplies. So you come here, Vertible supplies. So vertible supplies will include standard and zero rated supplies only. Yeah, exempt is not a vertible supply. So we'll go to the output VAT. Yeah, so we'll pick sales at standard price. Yeah, because they're talking about what? Vertible supply. So we'll say equals to, it will be sales at standard price, which is that, plus the zero rated. This exports to Zambia. You don't include the exempt sales. Sawa. Yeah, then you enter. So we'll have that as the vertible supplies. Then we now look at the total supplies. What is the total supplies according to this question? So total supplies will include sales at standard price, export to Zambia, which is zero rated, plus the exempt sales, because they were all sales. So total supplies, we sum all this. Take that plus this plus 250, because that's the total supplies. You get that value. Then what about total input tax? So total input tax, what about it? So what is the total input tax? So this is the input VAT, so the tax are here. Yes, the total will be the sum of all this. Okay, yeah, so we'll say equals to sum. So I'll sum all this because that's the total input tax. And I'll enter that. So there's something I want you to get before we calculate the deductible taxable income. Yeah. So in most cases, if the fraction, what I mean by the fraction is that you take the vertible supplies, you divide by total supplies, and you realize that the fraction is more than 90%, then our deductible will be output tax minus total input tax. Okay. Sorry, our VAT payable, but we are yet to get there. So let me just do the deductible first, then yeah. So therefore, deductible income tax, because they requested for it, will be equals to, yeah. Now we can work it out here because we have the values there. So deductible input tax, according to this question, will be vertible supplies, which is this value here. You divide by total supplies, which is that. Then you multiply by what? The total input tax. Yeah, so the deductible input tax is this value here, 93,930,060.362. Yeah, so that's how we are supposed to answer question 1, Roman 1. So output tax, so they're asking about the output tax. Yeah, so what will be our output tax? Yeah, so the output tax, simple, because you already have the statement. Already of what we call the statement. Yeah, so we just sum the tax here. Yeah, so I can see if you add this to 0 to exempted, we'll only have this. Yeah, so our output tax will be, will be that. Yeah, so you have just answered that question. Then now part 3, VAT payable or refundable to Kondiek Limited for the month of July 2025. Yeah, so this now you'll pay attention once again. So that will be Roman, this was Roman 2, and this is Roman 1. Let me name them. Roman 1. This is Roman 2. Yeah, so Roman 3. Let me do it here. Yeah, let me do it. So we are looking at VAT payable and refundable for Kondiek Limited. Yeah, and you see, if this question did not have this statement here, the requesting for deductible input tax, or did not have this statement, 20% of purchase as standard can be directly identified from sales at standard rate and exempt supplies. Then the balancing figure. So if this other side was more than this other side, then we'll have what we call VAT refundable. Well, this side, if it's more than this, then VAT payable. Yeah, and because now we don't have that, we have the deductible input tax. This is what we are going to do. We are going to do a test, yeah, and we are going to do that test in a fraction. Yeah, so there are two things. So I'll start with where the fraction is more than 90. So I'll say fraction more than or margin, but let me just say fraction more than 90%. What do we do? How do we get the VAT payable or VAT refundable? Yeah, because we have the deductible supply. So when you look at the formula, deductible input tax, we have variable supplies, we divide by total supply. So that's what we want to get the fraction. Is it more or less than 90? So than 90%. So if it is more than 90%, then there's a way we'll treat it. So I'll come here and get the deductible input tax. The fraction is between variable supplies, we divide by total supplies, and the values are already there. So what I will do, I just say equals to, yeah, I'm doing the first test, which is fraction more than 90%. Let us see. So our variable supplies was this. When you divide it by total supplies, what is the percentage? So when you divide, this is the percentage, and you can change. You can see it's already more than 90. Yeah, so you can see it's 97.5. So it's greater than 90. It's more than 90. So what do we do? How do we calculate the VAT payable when the fraction is more than 90? Yeah, so when the fraction is more than 90, they are going to use this formula. Our VAT payable stroke refundable. You pay attention. So VAT payable, because we have confirmed according to our question, it's more than 90. So therefore, our VAT payable stroke refundable will be equals to the output tax. Let me say output tax, which we already have, minus total input tax, or the input tax. Input tax. And to pay attention. So you see, now what will we are answering number 3, because we have found out that the fraction is more than 90%. And which fraction is this? The fraction originates from the formula, which is deductible input tax. You take variable supplies over total supplies. Yeah, you don't multiply by total input. Just take a fraction of this, this 2. You divide this by this and you get the fraction. And we have realized it's 97%. So that's more than what? 90%. So if it is more than 90%, then VAT payable to refundable is output tax minus input tax. So this is what you do. What is our output tax? It's already here. You subtract what? The total input tax. So what was our input tax? So the total input tax is there. Pick that, subtract that. Yeah, so when you subtract in that manner, you enter. You can see I have a positive of 399,552. So that's VAT payable. If it is positive, then that is VAT payable. If it was negative, if we get a negative value here, then that will be VAT refundable. Sawa. Yeah, so therefore, our VAT payable, VAT payable is this value here. Yeah, because it's positive. You take the output tax minus input tax, and you get a positive figure. That's VAT payable. If it was negative, then that will be VAT refundable. So the difference between output tax minus input tax, if it was negative, then that's VAT refundable. And because in this case it's positive, that's VAT payable. Then you will ask me, now what happens if the fraction, yeah, the other test that you do is when the fraction is less than 10%. Yeah, so already you have answered this question. Yeah, so by getting this, you have the 5 marks. Yeah, but there's an instances where fraction, those are the tests that you do when fraction is less than what? Less than 10%. Yeah, you'll ask Mwalimu, what happened now if the fraction is less than 10%? So when the fraction is less than 10%, this fraction is the variable supplies you divide by total supplies. Yeah, so you have divided this and this, and when you change into percentage, it's less than 10%. So maybe 9.9 or 8 or 1 or 0.1%. Okay, Now, how would we get the VAT payable or refundable? So in this case, the VAT payable stroke refundable, this is the formula that will be used. So the VAT payable stroke refundable in this case will be the output tax. Take the output tax minus 0. So take the output tax minus 0 to get VAT payable or refundable. So I've said that if the value is turning out to be positive, it is VAT payable. If it is a negative value here, then it will be refundable. As simple as that. Then you ask yourself, then what happened when the percentage of fraction, any other percentage, now it's not more than 90% and it's not less than 10%. Yeah, so any other percentage. So let us say like less than 10 will be 9 all the way down. More than 90 will be 90 plus 1 all the way. Yeah. So what if we have something like 78? Because those are the only 3 tests that we have to carry out. Okay. Yeah. So any other percentage. So I'll say any other percentage. Any other percentage. That means that you have taken the variable supplies divided by total supplies, and the percentage you are getting is 89, because 89 is below 90. Yeah, so it's not more than 90 and it's not less than 10%. So ni hapo katikati, maybe a figure like 78 or 89, those figures there. Yeah, so what will you do with any other percentage to calculate what? VAT payable stock refundable. So you just say here, VAT payable stock refundable will be equals to output tax will be equals to output tax, still output tax, but this case minus what? Deductible input tax, minus deductible input tax. Yeah, and the if it is positive, if it is positive, then that is what? VAT payable. If it is negative, then that will be VAT refundable. The same thing we have analyzed there. So those are the only tests that you have to carry out whenever you have a deductible input tax. So it's not a must that they ask you about deductible input tax, but they will tell you that there are some percentage of purchases at standard rate that will not directly be identified from sales at standard and exempt supply. So you have to know that at that point now, you have to come with deductible input tax. Yeah, they can just ask you to give the output tax and maybe VAT payable or refundable to the company. Yeah, so that's how you're supposed to tackle that question, and you get your 20 marks. So let me take this opportunity to wish you all the best in your exam, which is coming up on Friday. So you prepare well. You know you are reading, go through my videos, and like the video, subscribe, and let the channel grow. So thank you so much and have a blessed evening.